Did you know that investing just $100 a month could grow into over $100,000 in 30 years, thanks to compound interest? It's true. The power of compound interest means that your money doesn't just earn interest, it earns interest on the interest, leading to exponential growth over time. By consistently investing a modest amount each month, you can build substantial wealth without needing a large initial capital or a finance degree. In this guide, we'll explore 5 essential tips to help you navigate the investment landscape with confidence and make the most of your financial journey. Before you invest, clearly identify your objectives. Are you saving for a vacation, buying a home, or planning for retirement? Your goals will shape your investment strategy. Short-term goals may require safer investments, while long-term goals can accommodate more risk for potentially higher returns. For instance, if you're planning a vacation in the next year or two, you might opt for low-risk investments like high-interest savings accounts or short-term government bonds. On the other hand, if you're saving for retirement 20 or 30 years down the line, you can consider higher-risk investments like stocks, which have the potential for greater returns over the long term. Familiarize yourself with the main types of investments. Stocks offer potential for high returns but come with higher risk. When you buy a stock, you're purchasing a share of ownership in a company. The value of your investment can fluctuate based on the company's performance and market conditions. Bonds, generally more stable, providing fixed income with lower returns. Bonds are essentially loans you give to governments or corporations, which pay you interest over a set period. Mutual funds and ETFs combine multiple assets, offering diversification to reduce overall risk. These funds pool money from many investors to purchase a diversified portfolio of stocks, bonds, or other securities. Understanding these options will help you make informed investment decisions. For example, if you're looking for a hands-off approach, mutual funds or ETFs might be suitable, as they are managed by professionals and offer instant diversification. If you're interested in learning how to research and select individual stocks to buy, stay tuned. I'll be releasing a detailed video soon that walks you through the process step by step. Determine how much you can invest regularly without compromising your essential expenses. Consistent investing, even in small amounts, can lead to significant growth over time due to compound interest. The key is to start and maintain a disciplined approach. Consider setting up automatic transfers to your investment account each month. This pay-yourself-first strategy ensures that investing becomes a regular habit. Remember, it's better to start small and stay consistent than to wait until you have a large sum to invest. Avoid putting all your money into a single investment. Spread your investments across various asset classes, stocks, bonds, real estate, etc., and sectors to mitigate risk. Diversification helps protect your portfolio from market volatility and can lead to more stable returns. For example, if one sector of the economy underperforms, other sectors may perform well, balancing out your overall returns. You can achieve diversification by investing in mutual funds or ETFs that cover a broad range of assets. The financial markets are constantly evolving. Keep yourself informed about economic trends and market developments. However, avoid making impulsive decisions based on short-term market fluctuations. Successful investing often requires a long-term perspective and patience. It's natural for markets to experience ups and downs. Reacting emotionally to short-term market movements can lead to poor investment decisions. Instead, focus on your long-term goals and stick to your investment plan. Regularly review your portfolio to ensure it aligns with your objectives, but avoid making changes based solely on market noise. By following these tips, you'll build a solid foundation for your financial future. If you have any questions or need further guidance on specific investment topics, feel free to ask. Mastering these investing basics is your first step towards building long-term wealth. If you found this guide valuable, make sure to hit that like button and subscribe for more financial wisdom and practical guides just like this one. What's the first investment step you're planning to take, or what topic do you want to see covered next? Drop a comment below. I read them all. Thanks for watching, and let's build a smarter financial future together.